How does it feel being back in Hong Kong?
I feel good. It's very buzzy. I was here a year ago, and the vibrancy that we were already feeling last year has picked up yet again.
Yeah, and well, 12 months on, we're ready to continue the conversation. And I think back then, from an investment thesis perspective, people were saying, oh, how high the yields get. 12 months on, we're still trying to figure out that question. What do you think is the answer going into next year?
Well, yields, if you're asking if yields have peaked, that's always hard to call, but yields have definitely increased, and we actually think it's a very good environment for investors to focus on fixed income, and in particular adding credit to their portfolios, and in particularly also focus on adding duration to portfolios. In environments like this, where we're still in somewhat risk on, those opportunities can provide a safe haven.
Right, and you know, a big part of the last, I would say, 6 months or so, just this massive move into all things cash, cash-like securities. From your perspective, are you still seeing that flow? Are people starting to come out of that? Are people moving up in duration? What is that conversation like?
It really depends on where you are in the world, but broadly in the Western world, in particular in the US, we did see in 2022 a big switch into cash, that investors maintained that allocation for a large part in 23, but are starting to come out of it, are starting to go mostly into fixed. We believe also some good opportunities exist in equity income and sort of value stocks for companies that have strong balance sheets, but on the whole, we're starting to see an extending of duration.
Right, and that's a bit counterintuitive, because the big question this week was you had a big drop in bond yields, and who knows if that continues, of course, and immediately people go, that's a signal we get into growth stocks as well. You still think this is an environment where defensives and income still dominate in the equity complex?
Our view is defensive is the way to go in the coming period. Also, if you look at the S&P 500, once you take out, and this has been well documented, once you take out the technology sector, the earnings that we're seeing coming from the S&P isn't as good to really justify on the whole a growth strategy.
In terms of dividend strategy, if you talk a little bit more about that, that doesn't seem to get the spotlight that it needs right now.
It never really does. We have.
Well, it's not exciting. Let's face it.
Yes, growth tends to be much more interesting to talk about than dividend, but you can get into some very good quality companies, strong balance sheets that perform in a more predictable manner, and in this kind of environment, that is actually very useful to investors, as they're still somewhat in risk off. So we have strategies that are focused on that equity income. In fact, for one of our investment managers, Newton, we also launched an Asian income portfolio, which is part of an existing suite of products. And we actually believe also in Asia you can find some interesting defensive companies to add to the portfolios.
What goes into that Asian investing basket? Does Japan go in there as well? Because Japan's become a part. If not, what is in that recipe?
So it is mostly Asia. So it is Japan, Korea, Australia as well. Some of the safer opportunities.
Yeah, the lower beta markets.
Correct.
I need to ask you about China. What conversations are you having? Do you get a sense that, because there's a massive premium that's been built into this market, and I'm wondering whether are investors warming up to China? Have they been asking a little bit more about it before they even pull the trigger?
So we haven't seen many investors pull the trigger just yet. And again, we were just talking about certainly investors in the... We also have to keep in mind that investors in the West, in the US and Europe, are having a different experience than investors in the markets here. So broadly cash, broadly fixed income, broadly still somewhat risk off. So generally less emerging markets, generally cautious on China, but the interest, to your point, is rising, because we have to keep in mind as well that China is a very large economy, and it is still growing. Of course, it's growing at a lower rate than what had been expected, but we're still looking at 4 to 5%, which are not growth rates that we're seeing in the Western economies.
Yeah, it's all context, isn't it, as well? And do you suspect that the reason people are staying away from EM in China is that a function of what's happening inside, or is that because of just this higher rates environment that is quite toxic, really, to most risk assets?
It's a mix of things, and again, it really depends on the investors, on their own asset allocation, on the risk appetite that they have. But it's very much a combination of the higher rates environment as well as risk appetite.
A bit of a hard pivot, but to an important topic. 30% Club. Tell us about that. What are you guys are busy with? And just give an introduction, I guess, to some of our viewers who might
So
be hearing
thank you
about
for
this.
asking.
Yeah.
So I'm chair of the 30% Club, which is an organization that focuses on the lack of diversity on boards as well as in the C-suite. We're thrilled that actually in a number of our chapters around the world, we have achieved 30%. That is in the US, UK, Ireland, Canada, but also in this region, in Australia, and intriguingly, I sometimes say Malaysia, last year joined that club. But there's a lot more to do because our campaign has focused on the lack of diversity of women on boards, but we really need to make a bigger push in the C-suite. We're not seeing that many female CEOs. In fact, I was looking at the stats for APAC. I think 4% of CEO roles here of listed companies are held by women. It would be nice if we just see more of that, and quite frankly, I think quite important for business performance.
Very quickly, why do you think that is? Like, I know it's a complex set of issues, but if you could name one or two, what will be the key challenges that you're looking to address?
We're looking to continue to look to address the pipeline. Companies are broadly doing well on the intake, but it's really about now inclusion comes in. How do you keep women in? How do you keep that diversity in? It's around the mid-30s, but also around late 40s, early 50s that we tend to see a higher dropout rate right at a point in time where we like to see women make that push into the C-suite or the boardroom. So companies have a lot more to do in that regard. Look, I wish we didn't have to exist. That would ultimately be the end goal of the 30% Club.